Welcome to FXTech's comprehensive GBPCAD analysis, covering the period from October 27th to November 1st, 2025. In this presentation, we'll examine the key factors driving the British pound to Canadian dollar exchange rate during this critical week. We'll analyze important news events, technical indicators, and provide actionable trading strategies for both short-term and medium-term timeframes. Our analysis draws from multiple authoritative sources including TradingView, Investing Live, Action Forex, Forex.com, and Daily Forex to give you a complete picture of the GBPCAD market dynamics. Whether you're a day trader or a position trader, this analysis will equip you with the insights needed to navigate the GBPCAD pair effectively. Let's dive into the analysis prepared on November 3rd, 2025. The Bank of Canada delivered a significant policy decision during this period that had major implications for the Canadian dollar. On October 23rd, the BOC cut interest rates by 50 basis points, bringing the policy rate down to 3.75%. This marked the fourth consecutive rate cut as the central bank responded to cooling inflation. However, what's particularly important for GBPCAD traders is that the BOC signaled a more gradual approach to future easing. Governor Tiff Macklem emphasized that while inflation has eased considerably, the bank would proceed more cautiously going forward. This hawkish tone within a dovish action provided underlying support for the Canadian dollar, limiting the downside for CAD and creating resistance for GBPCAD at higher levels. The market interpreted this as the BOC nearing the end of its easing cycle. The Federal Reserve's policy decision created significant ripples across currency markets, including indirect pressure on GBPCAD. The Fed delivered an expected rate cut, but surprised markets with hawkish forward guidance, signaling a slower pace of future easing than previously anticipated. This hawkish pivot caused Treasury yields and the U.S. dollar to strengthen sharply as markets repriced their expectations for Fed policy. The strengthening dollar had a cascading effect on other currencies, with sterling plunging to 6-month lows against the USD. This USD strength created indirect downward pressure on GBPCAD through cross-currency dynamics, as GBP weakness against the dollar translated into broader sterling weakness across the board. The Fed's hawkish stance became a key headwind for the British pound during this period. The UK autumn budget announcement created additional headwinds for the British pound during this period. The UK Chancellor's budget created significant market uncertainty as investors worried about the country's fiscal trajectory and economic outlook. Budget-related concerns about increased government spending and borrowing put pressure on sterling against most major currencies, including the Canadian dollar. The fiscal policy uncertainty, combined with ongoing concerns about UK economic growth, created volatility in all GBP pairs. Market participants expressed jitters about the budget's implications for inflation, interest rates, and overall economic stability. The double pressure from both Fed policy tightening and UK fiscal uncertainty created a perfect storm for GBP weakness, accelerating GBPCAD's decline as the pair faced headwinds from both strengthening Canadian dollar and weakening British pound simultaneously. Let's examine the technical picture for GBPCAD. The pair is currently trading at 1.8414, showing clear bearish momentum across multiple timeframes. The technical indicators paint a consistent picture of downside pressure. The relative strength index at 42.5 indicates we're approaching oversold territory but haven't reached it yet, suggesting potential for further downside. The MACD histogram is negative at -0.0023, confirming bearish momentum, though the magnitude suggests the selling pressure may be moderating. Moving averages show a classic bearish alignment with the 50-day MA at 1.8523 and the 200-day MA at 1.8534, both acting as resistance above current price. The pair is trading below these key moving averages, reinforcing the bearish technical structure. This technical setup suggests traders should be cautious about taking long positions until we see a clear break above the moving average resistance zone. Understanding key support and resistance levels is crucial for effective trading. On the support side, immediate support sits at 1.8411, just below current price. The psychological 1.8400 level provides additional near-term support. The major support zone lies at 1.8325, which represents the recent low and a critical level to watch. If that breaks, the next major support comes in at the 1.8200 psychological level. On the resistance side, immediate resistance is at 1.8419, very close to current price. The 100-day moving average at 1.8457 represents the first significant resistance hurdle. Above that, the 200-day EMA at 1.8534 acts as major resistance. The key resistance zone sits much higher at 1.8835 to 1.8900, which would require a significant shift in fundamentals to reach. Current price action suggests GBPCAD is consolidating in a tight range, with the direction of the next major move dependent on whether support or resistance breaks first. For short-term traders looking at a 1 to 2 week time frame, let's start with the bearish setup. This strategy is designed to capitalize on continued downside pressure if the pair fails to break above key resistance. The entry point for the bearish trade is on rejection from the 1.8457 level, which corresponds to the 100-day moving average. This is a key technical resistance that has proven difficult to break. The initial target is 1.8325, representing the recent low, with an extension target down to 1.8200 if momentum continues. Place your stop loss above 1.8500 to protect against a breakout to the upside. This setup offers a favorable risk-reward ratio of 1 to 2, meaning you're risking 1 unit to potentially gain 2. This bearish setup is ideal for traders who believe the fundamental headwinds for GBP will continue to pressure the pair lower. Now let's look at the bullish setup for short-term traders who want to position for a potential reversal. This setup is triggered when GBPCAD breaks and holds decisively above the 1.8500 level with strong momentum. A break above this level would indicate a potential reversal of the recent downtrend and shift in market sentiment. The initial target for this bullish trade is 1.8600, with an extension target up to 1.8700 if buying momentum accelerates. To manage risk, place your stop loss below 1.8400, which would invalidate the bullish thesis. This setup also offers a 1 to 2 risk-reward ratio, maintaining disciplined risk management. The key to this trade is waiting for a decisive break above 1.8500 with strong volume and momentum, not just a brief spike above the level. Both the bearish and bullish setups give traders flexibility to trade in either direction based on how price action develops. Looking at the medium-term outlook over the next 1 to 3 months, we expect GBPCAD to consolidate within a range of 1.8200 to 1.8700. There are 2 primary scenarios to consider. The range-bound scenario has a 60% probability. In this scenario, the pair continues to trade within the 1.8200 to 1.8700 range as the market digests recent central bank decisions without major economic shocks or policy shifts. The optimal strategy here is to sell near resistance and buy near support, essentially range trading the pair. The bearish scenario has a 40% probability, where GBPCAD breaks down to trade between 1.8000 and 1.8200. This would occur if the BOC maintains its hawkish stance, providing continued CAD support, while UK economic data shows further weakness. In this scenario, the strategy is to sell on rallies around the 1.8500 level. Monitor BOC policy signals and UK economic data closely, as these will be the primary drivers determining which scenario unfolds. Let's examine the upside risk factors that could drive GBPCAD higher than our base case expects. These are catalysts that would strengthen GBP relative to CAD. The first major upside risk is a BOC dovish shift. If the Bank of Canada pivots to a more dovish stance than currently expected, it would weaken CAD support and potentially drive GBPCAD higher. Second, strong UK economic data could boost confidence in sterling. Stronger than expected economic indicators from the UK would improve sentiment toward the British pound and support GBPCAD gains. Third, UK fiscal resolution could provide upside. Resolution of Brexit-related uncertainties and greater fiscal policy clarity would remove a key headwind for sterling. While these upside risks exist, they currently appear less likely than the base case or downside scenarios. However, traders should remain alert to any shifts in these fundamental factors that could change the outlook. Now let's look at the downside risk factors that could drive GBPCAD lower than anticipated. These are catalysts that would strengthen CAD or weaken GBP. First, a BOC hawkish stance represents a key downside risk. If the Bank of Canada maintains its hawkish policy longer than expected, it would provide continued strong support for the Canadian dollar. Second, deteriorating global risk sentiment could pressure GBP. A risk-off environment typically strengthens safe haven currencies like the US dollar, which would pressure sterling and, by extension, GBPCAD. Third, further UK economic weakness would undermine sterling. Additional signs of economic deterioration in the UK would weaken confidence in the British pound. Fourth, escalating US-Canada trade tensions could impact the Canadian economic outlook and create volatility in CAD pairs. These downside risks appear more probable in the current environment, which is why our base case leans toward range-bound to slightly bearish over the medium term. Let's conclude with our key trading recommendations for GBPCAD. First and foremost, risk management is paramount. Never risk more than 2% of your account on any single trade. Adjust your position sizing based on current market volatility to maintain consistent risk levels. Stop losses are mandatory on all positions without exception. This protects your capital and ensures you live to trade another day. Monitor key fundamental drivers closely, particularly Bank of England and Bank of Canada policy signals, as well as UK and Canadian economic data releases. These will be the primary catalysts for significant moves. Be flexible with your strategy and ready to adjust to changing market conditions. Don't marry your bias. Maintain discipline by sticking to your trading plan and avoiding emotional decisions. In conclusion, GBPCAD remains in a consolidation phase following its sharp decline. The BOC's hawkish stance supports CAD while UK uncertainties weigh on GBP. Trade the range with defined risk parameters and stay alert to central bank signals. Thank you for watching this FXTech analysis.